Good stuff. So I had some questions for you, Jeff. Um, and I think that's just kind of, I guess the big topic today is cash flow, right? It's the lifeblood of every business, right? So
Yep.
what's important in your opinion about, I mean, obviously managing cash flow is important, but what's the most important thing if you had to choose one thing?
I think from when it comes down to managing cash, I think for any business is to monitor it, and I think the most important thing is having a cash flow forecast. And it usually, I feel like that is, it helps monitor it so you can actually manage it. And a lot of folks, and especially CEOs in different companies, they have a good grasp on it, but if you make transactions today, like what is the outcome in the future, that you won't know that unless you have a forecast. So it's a very powerful tool to help manage that cash, right? And it's not a let's just create it and let it sit there. It's it's a tool that you need to use regularly to help make good business decisions.
Is there like a regular cadence to this? Like what is it the same for every business? Do you
Yeah, no, that's a good question, and I don't. I think a forecast for sure can be used in any size business, but I mean, if you're very strapped for cash and cash is very tight, you can even look at your cash on a daily basis if it really gets very, very tight. But the standard is that 13-week cash flow where you're looking at on a weekly basis. And when there's a surplus of cash, I mean, you can even move to a monthly forecast. But for the most part, is you're just looking at weekly. Like I said, if things get a little tight there, you can move down to a daily to really maximize that cash flow, so you're not spending money you don't have really.
so I guess what I'm hearing is if you get into a regular routine, then it's easier to manage. Is there a point when anyone can like you can relax about it? Like when does that ever happen?
Well, I think if you start to see that surplus in your bank accounts growing, there's a little level of security, right? And you can have your cash reserves, open up savings, and start to invest that money. But for the most part, it should be an exercise that's done consistently, because you're just moving. Every week comes by, every day goes by, and you're just moving that needle. And bills are still coming in, AR is coming in with that cash, and that's really it, right? Is to if you do that consistently, like you said, it gets a little easier to manage that, but you just make the good decisions, right? You want to buy a vehicle, you want to hire more people. Like the cash flow forecast is a tool that you're going to use in almost all the business decisions, to really look at the impact of cash.
Now, I know that a lot of business owners just look at their bank account balance to be like, oh, we're okay. Do you think that's enough? Is that good enough?
No, definitely not. And I chuckle because I know some CEOs that have done that, and while there's some money in there, like I think we've kind of caught some things that might not have ended well, and I say that because there might be checks written or wires in a queue depending on what kind of AP solution you're using, but if you're writing checks, I mean, there's a float out there that takes into account like that those checks are written, that cash already out, that might not be reflected in that balance, but yeah, for the most part, it's really what's going out the door and then what's coming in. I kind of look at it as that highway. You got money coming in, going out, and having a forecast like this gives you the clarity and visibility into it. And the longer you go, there's estimations for it. So, I think the game isn't do we get it down to the penny, but how close can you get it to accurate as possible? But you'll start to see those business decisions get a little easier once you start using a tool like that.
Okay. Um, the other thing is you talked about a 13-week rolling rolling cash flow projection, and that tied to the accounts payable and the accounts receivable as well?
Yeah, and it definitely is, and that's about like that 3-month outlook, for the business. But you do take into account like the AR, and this is on if you're on the accrual accounting, but you take into account of what is your AP and what's your AR, what's out there, what's sitting there. Is it taking long to collect? And this is where you can look at your cash and see, oh, shoot, should we actually accelerate our AR? Try to collect some of this cash because we need it, as well as payables, right? And if things get a little tight from a cash perspective, I mean, you can really make those decisions of we should probably collect, try to make those efforts to collect the cash sooner than later, and then If things are really tight, maybe there's some options where you can push out some payments or work with some vendors there, but you do take into account the inflow and outflow of that cash.
Okay. And I feel like there's a lot of people who just say, well, no, I don't really have any payables. I don't have any receivables. Do I need to move to accrual-based accounting? And and I think that it's sometimes it's a misconception that, like people understand what they spend every month, but in a sense that is, I guess is the detail, like we don't do accrual-based accounting, is that like a false sense of security, or does it matter? Because we're talking about cash, we're not talking about accrual. Like that's,
Yeah.
just sort of an idea, you know?
Yeah, I mean, I don't think it matters at all because, like you said, we're focusing on the cash, right? And what this forecast is it's the exact inflows and outflows that are coming in and going out, right? And it doesn't, to me, it doesn't matter the accounting method that you're using. It's strictly cash going in and out. Even when you look at an AR, you have some visibility of what is supposed to come in, what's supposed to go out from the AP side. And again, that doesn't matter, but it's really designed to help manage that cash flow so that you don't go negative and that you can get comfort in making business decisions from that tool.
Hmm. The other question is, then, so if someone does look at their, if they find themselves in a cash flow pinch, or sees one on the horizon, what are the different specific mechanisms that can be put into try to mitigate that?
Yeah, and I feel like that's very common through a lot of people. But once you identify and monitor that cash, you can start to manage it, and there's some good and bad scenarios, right? You can realize that you have a lot more cash than you thought, especially as you project out 3 or 4 months. But the other alternative is you could realize that you're going to be in a pinch, right? It may not be today, but you put something like this together, you realize that next month you're going to be in a little bind there. But it opens the door to those options, right? You start looking, I think, through the expenses. Is there a little extra meat on that bone that you can cut pretty immediately? Lines of credit, do you have that as a security in some sort of short-term bridge funding there? But even just going back to the basics, right, of looking at your AR, if there's any acceleration that you can do to collect some of that cash, maybe it is, we'll give you a 2% discount if you pay today. And then alternatively, look at the payables, and maybe there's good relationships with these vendors that, at least just to, be upfront and honest that you might be in a little pinch here if there's anything you can push out, or even work with them if things get really tight, from that. But the main part is that put something like a tool, like a forecast in place so you have that visibility to make those decisions ahead of time, be proactive than reactive when it's too late.
Okay. So you mentioned, there's this whole like tool and a projection. Does it make, have you seen like a common tipping point when founders or CEOs or owners have said, you know what, I need help with this. Like I can't do it myself anymore.
I like to say, like, this is a tool, like it's supposed to be managed and looked at, frequently. And like I said, it could be daily, weekly, or monthly, exercise, because all payables, receivables change all the time, and there could be these surprises that come up. And sometimes, CEOs and business owners are really good at what they do, especially they know what they want, where they want to go, but not necessarily how to get there. So having people that can help and kind of get in there to manage this effectively and have good conversations, and maybe hold some of these CEOs accountable too during their business decisions, right? Where we talked last week about making not making a purchase because you saw the outflow of cash, and then sometimes they might do something like that and say, what, we didn't talk about it, and so we'll look at the outcome that's going to happen. Now we got to scramble. So there's that, I would say a partnership there is to have that conversation, but have someone else be able to provide that value is very valuable.
Yeah, I remember having a conversation with a business owner about it was a partnership, and one partner was really excited about buying this very specific tool that was kind of expensive, and and the other partner was like, I don't know if we need to do this. And we had the conversation, and there's a number of things that I could bring to the table just to say, well, I'm just going to repeat back to you what you've told me, and about why you think this is a good idea, and I was able to help them understand that the decision to buy this expensive tool was very risky. It could turn out good or it could turn out bad, and obviously nobody knew what was going to happen. But there was other ways to test the hypothesis of what they wanted to accomplish without spending a significant amount of money to to test the hypothesis. And that conversation piece, I think, is also very valuable to help business owners get navigate the maze of which one is the best decision. To not say that obviously they ended up not doing it and everything turned out fine, but maybe that was the right decision at that time, and maybe we need to talk about it again later on. Um, well, good stuff.
And that's a good point too, right there, Chad. And I'm happy you brought that up because there's other, like even with the forecast, having that visibility, but in a situation like that, even, I mean, I look at it as like cash flow 2.0 is like doing some sort of scenario planning around that cash too, that what is that best case that, if we decide to make this decision, what is that best case? If that tool is going to help generate revenue, we project this, then here's the outcome. But alternatively, like if this doesn't go as planned, what does that have? What does that open the door to any sort of cash deficit? And it also helps put in play too of like, should we do this? Should we not do it? But if it's wrong, then we're really screwed, and that's a big deal. So that's a great example.
Another topic you brought up is just tools. Do you have any favorite tools that facilitate this, or is this just pen and paper and back of the napkin? Or...
Yeah, definitely not back of the napkin, especially as there's a lot of moving pieces in any organization with transactions. But I mean, the spreadsheet, if you're going, call it archaic, but at the very least, it would be way better than not having anything. Is just a simple cash flow forecast through Excel is very, very powerful. In today's world with AI, and there's tools out there that can help streamline it. At the end of the day, I mean, you're kind of using the historical information that that has been taking place in the organization, but also the forward thinking of the finance side, I like to say, and that's the projections, right? And the game isn't to get it exactly, but trying to get it as accurate as you can. Using that, things change throughout the year, and trying to forecast those changes to make the biggest impact is the best. But there's even just using good accounting solutions where you can link the bank accounts that are all streamlined is very helpful too, compared to doing all manual. But there's tools out there to help try to forecast a little bit, using that historical information, and then there might be some variables that you can kind of tweak. But there is that level of roll up your sleeves and getting in there.
Yeah, I definitely feel like there is a balance between technology and discipline with respect to this topic, because I definitely feel like even if you have the slickest, the coolest AI, whatever latest technology is, if you don't look at it every week or on a very consistent basis, then it loses the value. And having that, like the discipline of just understanding the consequences of your decisions and the tracking of saying, okay, we made this decision here, and then what happened? We went left or we went right, and understanding that is super important. Well, cool. Anything else to add that we didn't cover on this?
Yeah, I mean, I love the idea. Very big proponent of having technology, and I feel like you said, I mean, you're gonna have to get in there, and you're gonna have to look at it. You're gonna have to make those decisions. But there are tools out there to help make it easier. It's just not gonna do it for you. The business, the situations where if there comes around a time where you need to push out certain bills, like these tools aren't gonna do that for you. But having the tools that help, especially when you start looking at forecast data analytics, you can really start to make good decisions based off of some of these great tools. And I'm excited with the welcoming of the AI and all those functionalities. But it'd be cool to see the next 5 to 10 years of what's kind of around the corner that can help business owners there.
All right. Well, good stuff. Well, thanks for taking the couple months to chat with me. I think we have explored a couple different options, different details about cash flow management, and yeah, look forward to talking to you again soon.
Thank you. Yeah, this is great. Thank you for having me.
All right. Take care.
Thank you.